Hey everybody, got a topic today that I wanted to go over with you, and I thought this might work great on video, so we're going to try this out today. The topic is incentive stock options and how they are impacted by the alternative minimum tax, or AMT. This is an area that comes up quite often with our clients. It's one of the more complicated areas of equity compensation. So I've got an example that will illustrate some of the complexities around AMT and how you might help plan for this with your tax situation. All right, so here's our example client. And we've got a couple different cases here just to show some of the complexities around incentive stock options and the AMT calculation. So, with our sample client, we've got two spouses, both earning $200,000 of wages, a little bit of interest and dividend income. They're actually itemizing deductions as well. So they've got some charitable contributions, they've got some mortgage interest, we've got some real estate taxes, and enough to itemize deductions. So in the base case scenario, they're not exercising any incentive stock options. So really, just the W-2s, some itemized deductions, and tax liability for the year. Federal tax liability, a couple $1,000s owed at tax time, getting a little bit of a state refund back here. In this case, this is for California. And their marginal tax rate basically means the tax rate in which their next dollar of income is taxed at is 24%. So that's our base case. When we start thinking about incentive stock options, one of the things we want to look at and try to take advantage of is what we call a crossover point. And this is the point in which you can exercise a certain amount of ISOs and not be subject to any additional alternative minimum tax, or AMT. So that's the thing we're testing for here in this scenario. And we'll come down to the second page and we'll see we can have an adjustment for incentive stock options for AMT purposes of $38,500. Now, the next question is, what does that number mean? How do I plan around that? In this case, that $38,500 represents the amount of what we would call spread, which is the difference between whatever the fair market value is of the stock that you're exercising minus the exercise price. So for instance, if your stock is worth $10 per share right now and you have a $1 exercise price, the spread on each share that you exercise is $9. So when we look at the 38,500, and if we divide that by $9 a share per spread, that would tell us you could exercise about 4,200 shares of stock and not be subject to AMT in this situation. So that's an important number to keep in mind, because that's the amount that isn't going to generate any additional tax liability for the year. So other than just the exercise price itself, no other cash out of pocket impact to that level of exercise. So the next thing we want to take a look at is, what does it actually take to generate AMT? So we've got an example here of a situation where, let's say there's $150,000 of spread. And once again, that's the difference between the fair market value and the exercise price multiplied times the number of shares. So if we have $150,000 of spread at this income level, what you'll notice is that we're going to generate $31,000 of additional tax in AMT on a federal perspective. And in this case, since we picked California, we're actually going to generate a couple $1,000s more of AMT, even on the state side. Because California does kind of piggyback along with some of the same rules in terms of alternative minimum tax as the IRS does. So this just helps to illustrate it is very important to know what this number is, for you, and hopefully avoid some of these AMT tax considerations. So all of this to say, we don't always avoid AMT in our tax planning work with clients. One of the things that's important to know is a lot more about your situation in terms of how long your options are going to remain exercisable, how long you plan on working with the company. And we've also got a whole host of tax law changes that might appear in 2026 that could impact ISOs and AMT as well. So all of those other factors are important to know. So we don't always avoid AMT. Tax with our clients. Sometimes we happily have clients pay it because it can make sense in their overall long-term tax plan. But hopefully this example was helpful to understand some of the basics of incentive stock options and AMT. And of course, if you have any other questions, feel free to reach out to us, schedule an introductory call. We'd love to talk to you. Thanks.